From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello and good afternoon. Well, if I can say good afternoon, my name's Carl Rodder. This is Danny Akuye.
Not Nadine Blaney.
This is the COB. I was just saying before we came on, I'm fading. The market's fading. Let's have a look at where we finished because it was not a pretty day's trade, it has to be said, Danny.
Not as bad as yesterday though. So There we've got the COB 200 down just over 9 points or 0.67%, and looking at my numbers for the ASX 200 off about 49 points, also 0.67%. So really, given the lead from Wall Street, we did sell off yesterday. It's not too bad.
Yeah, okay, so about 0.3%. We'll see how we finish things once the post-market auction finishes up. Let's talk about the themes of the day though, however, and there's a few to pick through. Of course, I had a really interesting discussion this morning with Chris Weston, who I know you're buddies with as well, but just talking about how obviously this is being very much driven by US Treasury yields. And not so much, obviously, yesterday we saw the downgrade in US credit rating, but it was that strong ADP print last night. There's issues around, obviously, funding the US deficit that is putting, downward pressure on bond prices. And, well, here we are as a result. So maybe an excuse for a bit of profit taking as well, but certainly the maths aren't stacking up for a lot of investors now with yields back at around 5% at the front end.
Yeah, totally. And it could be just as simple as like, we've all been so bullish for so long and all the short coverings, taken place and everybody piled into the bullish camp. And markets look for an excuse to just say, yeah, I'll take some money off the table now. Yeah,
definitely. And that takes us to that point as well. Tight as a drum, the US labour market seems that way. We'll get the non-farm payrolls print tomorrow to see if we get further confirmation of a very strong US labour market. But last but not least, we'll talk about this a little bit more in a moment. We've got Apple and Amazon to look forward to tomorrow.
Exactly.
So that's $4.5 trillion worth of, big US tech reporting within minutes of each other.
Absolutely, and I think Qualcomm, I think didn't they report after the close or last night, exactly. So they would suggest they're down almost 7% in the aftermarket, so there's still ongoing weakness there in terms of chip supplies into potentially mobile phones. So I think everyone's going to be looking really heavily at Apple.
Yeah, and maybe a little bit of anticipation for that tomorrow, as well as the sell-off we saw in the NASDAQ last night, which was very much a yield story, led to a lot of weakness in tech today, right across the board. I think we saw Xero down by about 2% at different stages.
It's not too bad, really, is it?
No, it's not dreadful, but it was towards the bottom of the page. We'll see if we can get a look at those actually now, those tech names. But WiseTech off as well by 1.1%. Xero down by 3% in the end. So back below $120 per share. Block might be interesting too.
They're reporting as well.
Yeah, exactly. Yeah. So we'll get that tonight.
As is ResMed.
As is ResMed.
After the close.
Tonight is it? After the close tonight.
Yeah.
Yeah. Okay. So ResMed. Miners as well, something to look out for. Also weighing on the index at different stages today, and not quite as bad as the tech sector, but certainly some weakness coming through. BHP, Rio, and Fortescue. South
Iron ore prices coming down.
Yeah, you were talking to Attila Windel before, weren't you? $105 a tonne.
Yeah, well, it's down, around 100. And look, as far as he's concerned, the outlook isn't great at this stage unless the powers that be really come out with a big package, which at the moment is not happening. If anything, some of the local councils are actually tightening on the escrow accounts for the local developers. So, yeah, I think, he definitely thinks that there's been a lot of speculative bullishness in iron ore prices, which we're seeing. The bubble, well, not the bubble, but we're seeing a little bit of deflation at the moment.
The froth being taken off, perhaps,
exactly,
just a little bit.
Yes.
Retailers, let's look there, because there was actually some pockets of strength there today, and actually none of it on your screen, but the consumer staples area of the market did actually push higher. So here's Wesfarmers. Obviously you can see the discretionary names underperforming, maybe pulling back a little bit because they actually had gone on a little miniature run there for a week or so. We'll flip over the page just to see the last set of retailers there as well. And actually, again, doesn't really tell you the story about consumer staples there, but still tells you the story about some of this discretionary stocks which have naturally sold off, with some of the bearishness sweeping through the markets in the last 48 hours. But Danny, we did have some corporate news today. Downy EDI expecting a non-cash pre-tax impairment charge of nearly $550 million in its upcoming results. So that will be something to watch as we get through to earnings season. Link, also in the news.
Oh,
you can see the stock there down 3.7%.
Yeah, that is not a pretty story, is that one? They've actually, pointing to full year earnings of $178 million on a revenue of 1.23 billion, up 4.5%. But they're actually taking a full year loss of 418 million. And that's on that US disaster that they had over there. So yeah, Link has really been disappointing. Yeah,
indeed. And well, we've actually had some broker moves today as well. Citi lifted its target price to Orica to $17.45 from $17. So that's something to keep an eye on there. And well, let's push on, shall we, and get to our guest for the next 10 minutes or so, get his view on what's happening in the world. Mark Gardner from MPT Markets joins us at the desk. Mark, we've been talking about it a little while, that eventually maybe the cold, hard nature of financial mathematics might catch up and yields will bite stocks. Is this what we're seeing just a little bit here?
I think so, yeah, and I think Danielle summed it up really well in terms of, there was a huge amount of institutional shorts about 3 or 4 months ago, and then we ran into the AI rally. And look, whilst the technology is definitely a winner for the future, and will bring great productivity gains, etc. They're a mile off actually realising any of that revenue, and we saw that with AMD. I think last night, basically, I think they rallied 6% after their results. Which, revenues were down 18%, profit was, they lost $20 odd million or something. And but then the market started to question the outlook on the AI, which is pretty much one of the first cases where it's been questioned in this whole rally, really. So it could be a bit of a turn. Taiwan Semiconductors which was really brushed over about probably 3 weeks ago, had a really dour outlook on chips. They make 60% of the world's chips. So all the bullishness on these chip makers, I think, was really the last 2 or 3 weeks has been real froth. So, rising yields don't help, and you've got PEG ratios at higher than levels from the 2001 tech crash. So there's a lot of reasons to be taking profits up here, and if you've made great money out of it, it doesn't hurt to take some off the table.
Absolutely, Mark. I actually tweeted earlier on, and it was quite interesting in terms of this rally that we've seen in the NASDAQ. And here we go. On June 30th, the NASDAQ posted the strongest first 6 months of the index history, dating back to 1971. Yeah. And a 6-month return of 31.7 easily beats the prior record of 25.2 in 2019. So it's when you put it in context, and as you say, S&P earnings are actually down 7% so far in this second quarter, and obviously earnings expectations have been pulled down for 3Q and 4Q.
Yeah. You've got companies like Apple, for instance, that are trading at a 33, 34 PE at the moment, which is fine when they've got forward growth. And traditionally when they've traded at a 33 to 35 PE, historical range is about 20 to 40. The PEG ratio has been like a half. Like fair value is 1, anything above 1 starts to get overvalued. It's at 2.5 at the moment, which is extraordinarily overbought, and it's basically because they're going to deliver their 3rd consecutive decline in revenues tonight, and the second half of the year's, this quarter upcoming is their weakest quarter traditionally because everyone's waiting for the new iPhone in September, and they don't tend to do a lot of sales. So and they don't really have they're not really involved in the AI thing either. So and I would imagine that they make chips for Apple as well. I dare say that that Taiwan Semiconductors dour outlook might be. May have some forward orders involved in it as well. So, that factory in Taiwan makes more individual chips than all the other goods in the world produced combined. Like and there's 60% of the world's supplies. So it's a pretty good bellwether of how the global economy is going if they're basically cutting growth outlooks by 10%.
So tomorrow's results out of Apple and Amazon, they've often been little inflection points for sentiment. Considering we're at this kind of fairly, touchy moment in the markets perhaps, is there the risk that really a miss could sort of continue to push us further to the downside or maybe even stabilise things if we see a decent result?
They're going to have to be outstanding results. I mean,
Just
I don't think
yeah.
I think Microsoft and Google both basically beat estimates and came off. So the market's pushed itself to a point where even an outstanding result doesn't really justify the price. And and with Amazon as well, the AWS results will obviously, it's basically all of their profits. I think they run on a wafer thin margin for the rest of their retail, to be honest. So, and we had mixed results from Microsoft and Google, but quite often you can get a little bit of rebalancing between the two if they start to win back some market shares. So it's always a really hard one to pick because you can't use the other companies that they're competing with as a broad bellwether, because they quite often pinch, as we see between Snap and Facebook and things like that as well. You know, you'll have one that goes really well, one that doesn't, because they're taking each other's market share. But both are basically expecting declines in revenue, and I think AWS's sales growth has been easing off a little bit. It's not growing as fast as it was, but they still 30% of the world's 30% of the world's cloud services. So a bad result there will really put a hammer on all these AI expectations, because the likes of Nvidia, who have just been actively pumping this whole rally with really large forecasts. If those cloud services if those cloud services disappoint, I think we'll see those stocks that are at 480, 500 PEs across the board. I think Amazon's at a 330 PE as well. And
That's historical,
they're huge. Yeah, no, but I mean, I think it averages around about 120 or something like that. So, market's a little bit expensive. It'll have to be really good results.
Absolutely, Mark. Well, thank you so much for joining us, and it's going to be, as you say, very interesting to see how they come out after the close.
Cheers.
Mark Garner there from MPC Markets. Danny, stock of the day.
Yes.
It was Janus Henderson brought in $180 million in operating income in the second quarter of 2023. The diluted earnings per share were 54 cents compared to 53 cents in the previous quarter. So as a result, it was in the news. We made it our stock of the day. So have a listen to what our guests had to say.
I guess comes down to allocation size, and they haven't really been able to rake in those performance fees, but the fund's still coming in. So this one looks good. I think if you're after something that is a fund manager, this would be close to top of your list, given that exposure and the company just sort of growing that organic exposure. So I think Janus would be a hold.
It's been a very topsy-turvy sort of business. I guess I classify this as more of a trading stock. I think generally fund managers are really struggling, and they have for a while, and there's real structural headwinds I think that a lot of them are facing at the moment. And although Janus seemed to have grown its FUM and its revenue, it still had net outflows, only minor, very small. So they actually seem like they're probably doing a lot better than most, to be honest. As Josh said, there's a good diversification there in terms of how they manage money and which markets they're in. So that does take some risk out of the book. But I'd be a bit wary of it.
Okay, a bit wary of Janus Henderson. And I had the good fortune too today, actually, Danny, to talk to Pinnacle.
You did.
And the CEO, Ian McCoon there. And it was
a very... today,
Yeah, they were off by about 6% at different stages. I think it pulled back towards maybe 2 or 3. There you go.
Yeah.
So not such a bad result anymore, but I mean, the story that he was saying was that, well, for starters, of course, you probably spin it this way, but we're actually fairly pleased with how things have held up over the period. But with interest rate uncertainty, people don't want to put their money into riskier assets. So until that dies down, and then that part of the world's going to be, a tough business to be in.
Exactly. Can't say who, but somebody in the industry was telling me this morning, and that look, there are fund managers looking for great valuations in this sector. There's a lot of really bombed out fund managers looking cheap. And I'm not suggesting anyone's going to bid for Magellan, so let's just put that right off the table now. But it's not surprising when you look at some corporate activity starting to come in.
Yeah, interesting. I suppose it's a much harder business model now too, when you just don't have this constant flow of funds going into equities, or at least we haven't done in the last 12 months. Yeah. So let's go to the leaders and laggards, shall we, and see where things are finished. Virgin Money UK, top of the pops, takes us to what we'll be talking about in just a moment probably, is that the Bank of England meets in about 5 hours' time, tends to be very sensitive to US rates markets. So I dare say that some of the volatility there might be off the back of there. 25 or 50, that's the debate.
Yeah,
so
yeah, it is a debate.
Could be fascinating. And the terminal pricing there is about 5.8%, so that's a long way up still. Otherwise, few and far between as far as the leaders go.
Insurance companies finding some love.
Yeah, yields going up.
Yeah, yields going up, absolutely. Defensives like Metcash, those consumer staple stocks that were green on screen today. So yeah, I think you're absolutely right. I also think a broker said QBE might have a little bit better than expected result. I think I read that today.
Actually, the ACCC decides on the ANZ Suncorp thing yesterday. I was speaking to Paul
When's
Brennan.
That due?
Tomorrow, I believe.
Oh wow,
Paul
that's
Brennan
big.
Yeah, Paul Brennan was on the big picture on Monday, and effectively said, everyone's just sort of waiting for that because they've got a report soon too, so they've got to, obviously prepare for every scenario on this decision. But so that's going to be tomorrow. But anyway, I digress just a little bit just because we were talking about insurers. Let's go to the laggards. There'll be a few of those and a few ugly ones. Star Entertainment, Downer as well. Downer was in the news. Just spoke about Pinnacle. There you go.
Yeah.
Also, Polynovo and Link Administration. Actually, all that we've basically covered off so far in the corporate news today as that starts to ramp up going into reporting season. Small cap leaders and laggards, shall we? And nothing that really jumps out to me necessarily. In fact, actually, as you would imagine, I suppose on a day like this, the gains were fairly modest in the small cap land. Laggards, meanwhile, Sulphur, sorry guys, 35%, but that's what happens. Small cap stock, volatile. Otherwise, no theme I can necessarily see there, but a bit of softness coming through. The markets, what we're looking out for tonight, and like I said, Bank of England meeting will be interesting. Is it 25 or 50? But US earnings, can't put it any better than you and Mark did just before. Amazon and Apple, high bar set, can they exceed it? We'll see how we go.
Block and ResMed as well.
Yeah, exactly. So that'll be really important for us. I think I actually put ResMed on the other page because it's obviously a mistake. But US unemployment claims and US ISM Services PMI. One thing we didn't get to pick up with Mark is, everyone's been excited about this whole notion of a soft landing. But
the PMI figures were dreadful in America.
Well, the manufacturing PMI.
PMIs, was really weak.
Weak the other day. ISM Services tonight, though.
Yeah.
The whole story has been persistent strength there.
Absolutely.
And if that comes in a little hot, maybe the kind of, good news is good news narrative turns into good news is bad news because of what's happening in rates markets. So we'll see NFPs as well tomorrow night, but let's not get ahead of ourselves. Tomorrow, however, as I flagged, ResMed, full year 23, that'll come out tonight. We'll be able to digest it tomorrow when the stock opens. AGM,
Yeah, no, go on. Yeah, James Hardie. That was just interesting. They've announced a deal with D.H. Horton, which is one of America's largest home builders. And I must admit, I haven't got across the statement, but I actually thought that was, an exclusive national relationship with D.R. Horton, America's builder. And I would have thought that's reasonably significant. But the market, however, decided to turn tail on James Hardie and sell it down today by 2.8%.
Interesting. Okay, down by 2.8. Last but not least, RBA monetary policy statement. It will be interesting because, the RBA had that dovish language about its outlook. Well, relatively dovish language about its outlook on Tuesday. So what's the tangible numbers there? We'll get to find out. Decent set of forecasts, really, for what the central bank thinks for the next 3 years. Might inform the next couple of policy decisions, or at least Governor Lowe's final when it meets again in September. So plenty going on.
Yeah, I had a really interesting conversation with the CEO of FIFO, and he was talking about SMEs, which make up really the bulk of our economy, and they are really struggling. They're being hit. Rising costs, interest costs on all their loans, they get immediately hit. They've still got potentially staffing problems, they're seeing demand slow down, and availability of credit is shrinking. So I thought it was really interesting because we keep on hearing, labour markets are tight, and yes, and yes, and yes. But they're starting to hurt. So
There you go.
I'll put it out there.
We will. And in fact, next week we'll get the latest sentiment reads, confidence reads from NAB. So maybe will start showing up in the data soon. But in the meantime, we may as well leave it there. Again, the market down by, what was it in the end, Danny?
I have the ASX 200 down around 42.8 points, or 0.58% at 7,311, and the COB 200 down just over 9 points, or 0.67%. And just looking at the little Aussie battler, the Aussie dollar, there's a real war going on there just to make sure it isn't sold off today. It's currently fairly flat at around 65.33 against the US dollar. And just worth noting, for what it is worth at the moment, we do have the Dow futures are in the green, but no love for NASDAQ or the S&P futures at the moment. But hey, in these types of markets, when they start to get volatile, that doesn't mean very much.
Exactly. We'll see how we open trade tonight. But in the meantime, plenty of good content today, so you can catch up on it all on your website and app. Have a lovely evening, and we'll see you bright and early Friday morning.